Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khimka.
And I'm Yatin Mota.
Well, Yatin, we hit a fresh high once again. New day,
and
new high.
21,800 is here.
200 points away.
I think tomorrow morning only we should hit 22,000. So
yeah. You wanna bet on that?
The new year starts on a very strong footing. And I think this euphoria in the markets has just begun. 22,000 obviously is on site.
Yeah.
If you talk about the Indian markets, the global markets, everywhere I think the bulls are ruling, and bears are not to be seen anywhere near. So, even the bear which is behind Nandita is shying away.
Let's hope that the last trading day of 2023 also turns out to be, the same as today. We of course saw a thriller of a Thursday, and hopefully it will be a fantastic Friday for the markets, and we are able to cross that 22,000 level for the first time ever. In fact, around Diwali, when we were speaking to experts, they were predicting levels of 22,000, 23,000 by next Diwali. So looks like it is early Diwali, and of course New Year cheer that's playing out on the Lal Street. But of course, Yatin, today talking about the markets, then 21,800 has been clocked. But we didn't really end above that level. 21,778 is where we shut shop. Mid and small caps were also in fine fettle, but Nifty Bank Index also managed to hit a fresh high in intraday trade. Broader markets in tandem with benchmarks, India VIX, Yatin, had crossed that 16 level, indicating very high volatility, but that cooled off in the second half of the session. And aside of that, if you look at the sectoral movers, you had the likes of FMCG, energy, pharma. These were some of the top movers, but IT, sat out of today's up move, and it was in the red last time I checked. Among the key gainers on the Nifty, you had PSU names like Coal India, NTPC, and the likes. Hero Moto snapping out of yesterday's losing run. Dr. Reddy's, M&M, these are some of the other gainers. On the flip side, you had losers in the form of L&T cooling off. Of course, it has been bagging orders on a daily basis. Today as well, it has bagged a order worth 5,000 to 10,000 crore rupees. But cooling off a bit here. Eicher Motors, Adani Ports, and of course all the IT names like Wipro, Infosys, TCS, they were among the losers. But lots of double-digit movers on the mid-cap end of the markets. On the Nifty 500, Yatin, Hudco, 14 to 50% kind of gains coming in.
So strong gains coming in, and in fact if you look at all the top gainers on Nifty 500, they are all PSU stocks, starting with Hindustan Copper. The stock moved 15%. One of the top F&O gainers, stock is at a record high. Hudco, that stock moved 12%, was as high as 18% intraday, so good moves coming in there as well. HPCL and the oil marketing pack are doing really very well. If you look at HPCL, that stock has crossed the 400 rupees mark, multi-year high for that stock, and strong volumes in trade today. Nalco was the fourth PSU, which moved nearly 10%. So very strong gains coming in for the PSU basket. Now, a few stocks which saw some profit taking. BDL saw profit taking. Stock was down 4%. 3M India, Alkyl Amine were the stocks wherein we are looking at some cuts coming in by the tune of 3 to 4%. Zomato, that stock was down 3% after they received the GST notice worth 400 crores plus, in which the delivery fees that they have collected on behalf of the vendors, that's under the purview of the GST department, and hence a show cause notice has been sent to the company. But if you look at stocks which are at 52-week highs, we had the likes of Hindustan Copper, Hudco, Gillette, Engineers India, Rainbow Healthcare, Coal India, Lupin, MRF, GAIL, a whole host of stocks. So very strong overall market breadth. In fact, the market breadth improved slightly in the last half an hour of trade, but still at 1:1, which was almost the case yesterday as well, wherein at record levels we usually see some bit of profit taking happening for smaller stocks.
Well, that was all about the action in the mid and small cap end of the markets. Of course, on that note, let's take a look at some of the stocks that are on our radar this afternoon. Starting with HDFC Bank, Yatin, given the fact that the company's market cap in fact crossed that 13 lakh crore rupees for the first time. The stock, in fact, if you see, has had a very good run over the last 1 month or so. It has gained somewhere around 10%. In fact, this has been the best month for HDFC Bank since 2021. And it did snap a four-month losing streak last month, which is in November. And looking at the stock, its weightage on the Nifty, it has the highest weightage on the Nifty, 13.4%. And if you look at the stock movement on a YTD basis, it has moved just about 4% vis-a-vis Nifty's movement of 17 to 18%, right? So a lot of outperformance still left in the stock, given the fact that it has underperformed, the benchmarks till now. And yesterday, Nilesh Shah of Envision was on CNBC TV 18, and he was saying that, the valuations are so cheap for HDFC Bank. It is, in fact, the trailing 12-month PE is somewhere around 18x, which is trailing Nifty, right? And he said that in his entire career, he's not seen HDFC Bank trailing Nifty PE. So that's one reason why he's betting big on HDFC Bank. And all the experts, if you look at them, they have fairly bullish views on HDFC Bank, and they say that the merger synergies are yet to play out, and it will play out in the earnings over the next 3 to 4 quarters. And once that happens, of course, you could see the stock taking off as well. Today it ended higher by about 0.5% or thereabouts, but as I mentioned, has had a fairly good run. Over the last 1 month, we've seen gains of 10% coming in on HDFC Bank.
Absolutely, and this is one large cap stocks which has been underperforming, but recently on the back of MSCI and FTSE buying also, the stock was in focus. But Nandita, moving from banks to hospitals, Fortis Healthcare is one stock which has been hitting fresh 52-week highs. Obviously still underperforming its hospital peers, but now if you look at DAM Capital, they have a buy call on Fortis Healthcare with a target of 452. Now, Fortis Healthcare, the margin profile has been quite weak, but now with IHC's management coming in, IHH, which is, a Malaysian healthcare major, uptick in margins is likely to drive the re-rating moving ahead. In fact, over FY23 to 26, they are expecting a 16% profit CAGR for Fortis Healthcare. Now, if you look at the EBITDA margins, they are expecting that EBITDA margins for Fortis will improve to a level of 20% moving forward. And also, if you look at the EBITDA growth as well as return on equity, that will go hand in hand, which will clearly mean a lot for the company's market capitalization. So versus its peers, I think Fortis profile of return ratios has been weak, but once the catch up happens, especially on the margin front, brokerages do expect that there could be some significant upside for the shares of Fortis Healthcare. And do remember, they are also looking to come out with an IPO of their diagnostics arm, which has been one of the key unlocking areas moving ahead for the company. So watch out for this space. Looks quite interesting. As I mentioned earlier, DAM Capital has a buy on Fortis Healthcare, target of 452.
That's correct, Yatin, and of course the fact that COVID cases are rising, that bodes well for diagnostics and of course for Fortis as well. And I remember during COVID times, pharma, in fact that disease, came out as a silver lining for the entire sector. So we'll have to see how the situation really pans out. But it's a obviously blessing in disguise for some of the diagnostic and hospital names. But on that note, let's take a look at the other stock that's on my list today, CESC. This stock has had a good run today. In fact, there's been a major shift in strategy when it comes to CESC, and that is something that has been welcomed by the street, because the stock really needs some bit of a re-rating, given the fact that it is very new to its exploring of the renewable energy space. In fact, it has been exploring substantial investments in the renewable energy space, and in fact, the power generation base of CESC has minuscule contribution from green energy. In fact, it has bagged board approval to explore substantial investments in green energy with capacity up to 3,000 megawatts. And this comes at a time when its peers like Tata Power, JSW Energy, NTPC, they have reaped good benefits out of their focus on green energy, and it has helped those stocks re-rate as well. Till now, CESC was refraining from building or acquiring large power generation plants after it had a very bad experience with the Dhariwal power station, which was underutilized and which did weigh in on earnings of CESC as well. But now Antique has come out with a report on CESC where it has a buy rating. Target price has been raised to 150 rupees from 93 rupees per share. It has also cited the radical changes that are happening in the strategy for the company, and and it says that phase-wise contribution will add somewhere around 600 crore rupees per gigawatt of EBITDA by FY26. So, in the past, to expand its business, CESC focused on adding electricity distribution franchises outside Calcutta. Now, of course, Calcutta is its mainstay business, and it had won bids for 3 electricity distribution franchises in Rajasthan and Malegaon in Maharashtra. But these, units are yet to contribute significantly to CESC's earnings. And, the tepid growth in the mainstay Kolkata business is something that remained a headwind for the company. So, going forward, of course, its push or its shift towards this renewable energy generation is something that could lead to re-rating. That's what analysts believe, and that is something that the street will really be watching out for. But the key would be execution, and whether it can bag sizable number of projects or not, because it's a fairly competitive space now. And if you look at the stock among the large electric utilities, this particular company is the least valued stock at a trailing PE of 11.9x or thereabouts. So, how this whole renewable energy push pans out for CESC is something that will decide as to whether or not the stock will re-rate going forward or not. But all in all, the stock on a YTD basis has yielded 60% returns. Yatin.
Absolutely, and this is one stock which has been underperforming. But Nandita, more importantly, they also have a dividend policy. If they are able to maintain that dividend policy, the stock is available at an attractive 3 to 4% dividend yield for forward earnings, according to Antique report. So yes, brokerages have turned bullish, especially after the company plans to install nearly 3,000 megawatts of renewable power.
Well, those were the stocks on our radar this afternoon, but of course we are counting down to 22,000, and we'll discover tomorrow whether we hit that jackpot or milestone figure or not. But with that, for now, it's a goodbye from me and Yatin. Thanks a lot for tuning in. Come back and join us with the markets at 8:30 a.m. tomorrow morning in the last session of 2023. Till then, you stay tuned to Moneycontrol for all your other news and updates.